Hey guys, welcome back. This is the second part in the OB.Quant order block quant tutorial series. In the previous video I covered the section of market structure, and in this video we'll be covering the part that is dedicated to the rangefinder. Right, so for those of you familiar, there is quite a few changes in terms of the rangefinder into like how it works. It's much closer to what my original idea for the indicator was, and I've finally, been able to kind of crack the code and crack the logic to actually achieve this. Something you guys might have noticed is that the whole multi-time frame aspect is completely gone now. There might be potentially a future case where I bring some of it back, but in for different purposes. But for the time being, I'm leaving it out because I don't really feel that it's necessary anymore. The multi-time frame aspect was mainly to try and get the rangefinder to draw bigger ranges instead of having it be so chaotic. So since I fixed that for the most part, I don't think it's really that necessary anymore. But so let's dive into it. So if you haven't watched the first part, I recommend kind of watching that because the rangefinder is mostly based on market structure, highs and lows. So let's go. So the rangefinder, by default it's off, but you can turn it on obviously, and then it has a little setting here. You have two options now. So you can put it either on impulse or macro, and as you can see, impulse or macro. Macro is kind of like my default stuff, and it's similar as to how market structure speed works in terms of slow and fast. So let's see what it says. It says on impulse, it uses higher high, higher low, lower low, and lower high anchor points. So basically any type of higher low market structure point it can anchor to. And then in macro mode, it only uses higher highs and lower lows. So let's see how this looks. So if we turn it on and say macro, you can see that it actually draws quite a big range. Because in terms of market structure, let me actually activate it so you can see where it's detecting all these highs and lows. Let's see, so the last lower low that came in was actually here when this higher high came in and established the new range. And that's why this range is like so big, right? But if we change this to impulse, you can see that it's actually dividing that bigger range into smaller ranges because now it's able to use, let's say this lower high here, right? So depending on what you're trying to achieve with the rangefinder in terms of what ranges to display, I think for most people actually, and I'm kind of finding myself using impulse more and more as well. It's probably the one that I guess people are gonna like the most. This wasn't possible in version 2, and now it is in version 3, or OB.Quant as it's called now. And apart from that, you might also notice that it's now able to detect deviations of the range. So instead of how it was in version 2, where it would detect this lower low and create a new range here, because it within a relative short time span, it goes back inside the range. It actually doesn't create a new range from that point onwards. It just keeps this range stable and waits for an actual bigger move that fully moves outside of the range, basically, right? And those things combined together makes the rangefinder much more stable compared to version 2, and it's much closer to how you would, or how I personally would draw ranges manually if I were to do it manually. So I'm quite happy with the result. These little arrows here are basically indicating where the range locks in, right? There's a little bit of a confirmation period that needs to happen just to make sure that the ranges are not jumping all over the place. It needs a little bit of confirmation time to wait and see if this low actually holds or not before it actually draws in the range. So between market structure, fast and slow, and rangefinder impulse and macro, you can kind of mix and match them together to configure the rangefinder in such a way that it's makes sense to you or it's helpful to you, right? Because if we change this to fast, it will change again because there's much more market structure, right? So now it's just highlighting kind of like the last impulses, basically, right? We have this impulse here, which is a tiny range, which immediately get broken again and creates another little impulse, little range, and then the final impulse was this one. Yeah, and ever since we've kind of been trading inside of this range, right? We had tiny little deviations here above the range, taking the liquidity of the high, fell back into the range, and now we're back at the range low, and again had a little deviation below the range, and so on and so on and so on, right? So yeah, depending on what you're trying to achieve and how refined of a resolution you are looking for, you can combo these two together in which way that you prefer. And also, what I did is, where is it? Status line. Yeah, so if you turn on the arguments for your indicators, you have your titles, argument values. If you turn on the arguments, I've actually cleaned up the whole settings thing, so it only highlights this option and this option when you have your arguments on. So if you have those on, you can actually see on the indicator status line here how you have configured this particular OB.Quant indicator, right? So right now we can see that it's on fast impulse, right? So it's just a little handy little thing. Right. I tend to use it in slow impulse. That's kind of like the mode that I like the most recently, as it gives a little bit of a bigger overview, but not too big compared to macro. So yeah, play around with these, see which one works for you the best. But yeah, the concept is it's the same, right? It's always based on market structure. It just kind of depends on how fast or slow you want to have it run. Right, so let's move on to the next one, rangefinder resolution, right? So it loads by default basic. And you can see it's just the basic range. You have the range high, the range low, and then the mid-range is a dash line, just as if you were using a channel tool, basically. There's a little dash line here that's just indicating where the range starts, essentially. It's just a slight visual aid to kind of make it a little bit more obvious that where the range flips position. Right, so if we go to rangefinder resolution, we have basic, and the info tooltip says divide the basic range into smaller ranges. So if we click this, we have a couple of options. We can add the range quarters or the fourths, right? So now all the ranges, let me actually turn this off because we don't need the market structure that much anymore. Right, so now we have the range is divided into 4 if we right, so this is the full range, and you can see if I line up the Fibonacci tool, let me actually give this a bit of a red color or something so it's a bit easier to see. Right, the 25%, 75%, and the 50%, right? So there we go. Then we can add even more. We can add the eighths. So now we have even more lines. And as you can see, what I did is to kind of still distinguish the quarter range from the eighths and vice versa. And just this is kind of like, I think, the most visually clear, intuitive way I can make this. Because as you keep adding lines, it becomes more and more cluttered and more difficult to kind of keep track of which line is which. So the basic range is still the same. It's the kind of like the darker lines. The fainter lines are the quarter ranges, have a bit of a gradient against the range high and the range low to distinguish them from the other quarter ranges. And then the eighths are the dashed lines right above and below the 50% line, but they are solid in the upper and the lower quarter of the range with a little bit of a gradient. So it's just a little bit more visually intuitive, hopefully for you guys. And then there's one last option, or second to last, which is the 1/16. So again, we're just dividing the ranges in half, in half, in half, in half, over and over. but the 1/16 only are added to the top, the very top of the range. So it divides this eighth of a range in half again, right? It gives you the 1/16. And then here the same as well. It doesn't add them over here because it's not really that necessary. It's gonna make it very, very cluttered. And the idea behind it is that if you're familiar with basic range trading, which I'm gonna assume at this point everybody watching this video is or should be. If you're not, then again look up on YouTube basic range trading videos because there are tons of them out there. But yeah, normally speaking, if price is trading within a range, you kind of want to try and usually do business at the extremes because that's what gives you the best risk reward. But obviously, as the range is in place and price action is trading between it, then it's not a guarantee that price action, for example, in this case, will actually go all the way to the range high, right? So you have, as you come closer to that range high, you get a more increased resolution, refinement as you come closer and closer, giving you a couple of extra levels that you can look out for, right? And also another concept is, well, if you have an impulse to the upside, which then creates a range with the retracement, and if this is to become a new uptrend and it's going to keep going, well, then you're expecting that after the lower low, a higher low is going to come in, which automatically already tells you that if it's going to be a higher low, it should not be lower than the previous lower low. So then it makes sense that this one is going to be slightly higher, not interact with the range low. It's going to interact either with the 1/16 or the 1/8, because it's by definition a higher low, right? So that's kind of why I added these lines here. Yeah, I personally tend to use it mostly on the 4s because I feel that those are like the most important ones. But yeah, if you want, you can increase the resolution, if you will. And then there's also a colored version of the 16th because it's the one with the most lines. I also have the option, I added the option to have it color coded, which can also help you with visually identifying where price action is in terms of the range, right? Especially if you're like zoomed in very deep and it's like a big range or something, then it's a little bit easier to follow. Right. So let's move on to the next option, which would be the rangefinder targets. So what you can do is you can have 3 options. You can have either just the icons, which just gives you a bunch of icons and some targets. So for the ranges that are displayed, it always displays 3 ranges, so the 3 last ranges. For the ranges that have been locked and are part of historic price action, the targets will be on the left side because they're basically static and they won't move again. As you can see, because this range expanded to the downside, right? Ranges will always expand either to the downside or to the upside. The targets in this case are on the lower side of the range, and then in this case, because the next range after this one is an expansion to the upside, then the targets will be displayed on the upper side of this range. This one here and this one here are the deviation targets, which I'll explain in a second what they are, and they are static, these the fainter ones. So as we move at the look at the current range, we can see that price action is now interacting with the range low, which means that most of the targets are on the downside, except for the deviation targets. And the deviation targets is essentially just the 1-to-1 of the quarter range in this case, right? So the distance between this and this is the same as the distance between this and this, right? It's just a 1-to-1 target of the 75% line in this case. And then this is 1-to-1 from the mid-range, so the distance between this and this is the same as this to this, and the range low. So the full range distance from top to bottom is the same as from here to there. Right? It's just a copy of if you would do this manually with a Fibonacci tool. Right? If we add the these and extend them to the right, you can actually see that, see, all these just line up perfectly, right? It's just an automated Fibonacci tool based on the current range that it's in. And a difference between version 2 and this one is that these now adjust dynamically. So if price action were to just completely fall out, and as soon as it kind of like passes below, I think it's the mid-range, these targets will start shifting downwards. And if price keeps going, they will just keep shifting downwards, downwards, no matter how far price goes. Yeah, and all these also have their little tooltips telling you what they are. So if you want to have a little bit more information on the chart, you can add the tags. So the tags are just kind of like ID tags for what each line means. So in this case, we have range finder high, range finder quarter range, range finder mid range, range finder low, and then deviation and deviation. Like I said, deviation targets of the previous quarter. Right? I hope that makes sense. And it also highlights the, as you can see, the percentage, just as if it was an actual Fib tool. And it also tells you 3/4 of a range, 1/4 of a range, and so on. If we add the prices, then we also get their price values, just like with the market structure breaks or the liquidity pools, right? So it's all in the same style, all the same. And every tag is always 3 letters, so everything lines up nicely and neatly together. And it's not like jumping all over the place. If we then change the rangefinder resolution to the 1/8, you will see that inside the range they don't have an extra target, because it gets too much inside the range if I do that. But in this case, you do get another deviation target, which is in between the deviation target and the range high, and the deviation target and the range low, right? Because the 1/8 is right here, so this is just the 1-to-1 from the 1/8 of the range high. Right? Distance between this and this is the same as distance between this and this, and then also, of course, the same for if you have the 16th. Right? So if you have this on, then it will add another deviation target in between the other two. That is the 1/16. And again, you have the tooltips here that tells you it's the range 1/16th deviation at 1.0625%. And yeah, something to like observe, for example, if you're playing around with this, is that these types of small deviations, or even the bigger ones, they tend to all reject somewhere in this area, right? Either this one, or this one, kind of depending on, you know, how the market behaves. But generally speaking, from my observations, if price action breaks out of the range and starts trading higher, if it rejects any of these, there's a high chance or high probability that it will at least retest the range high before continuing on. But there's also a big chance that it will actually fall back inside the range, right? And then it might hold this quarter range for a while and consolidate in here, and then eventually break higher. But yeah, when it's if there's a range breakout in either direction, what you preferably want to see, if you're trading in the correct direction and you have a trade going on, that yeah, you preferably want to see it break through this deviation target area with force, and maybe retest it on the upper side like this, and then there's a much higher chance that it will actually keep going and completely, like, you know, go into price discovery or whatever. Right, so that's the rangefinder targets. Yeah, we can add the rangefinder Fibonacci targets. So as you can see, we now have also the Fib targets. They line up with the 1/8 inside the range, and then I've also added them here in the expansion targets, right? So this is the -625%. I know some of you are get triggered when I talk about this, but it is what it is. I don't only do this just because the difference is very small, because let's say if this is the 625, the 618 is like right underneath it. And it's also just for visual clarity to not have like another extra line here that's just basically almost the same line as the other one. It's just for visual clarity, it's just much more cleaner if I just line them up together and have them like this. And then last but not least, this is also a new option for the rangefinder, is that you can extend the previous high and low. And what you'll see is another line up here. Let me actually disable this and put this on 4 so it's a little bit less cluttered. But what you'll see now is that it's now extending the previous range high, because this new range is an expansion to the upside, so all the targets and everything is on the higher part of the range. And what you can see is that there's now a dotted line here which says PRH, which stands for previous range high, with its tag and price and everything. And yeah, this is basically just as price expands, it very often comes back and tests the previous range, right? And if we use the replay tool and go here, then in this case, what you can see is that since this range expanded to the downside, it's now tracking the PRL, which stands for previous range low, with the dotted line extending what was previously the range low over here, right? And these levels tend to be retested and consolidated around and stuff like that. I mean, again, most of you should be familiar with range trading, so this shouldn't be too alien to you. And then if you pay attention, it also extends the other opposite side of the range to actually indicate from which point it's pulling from, right? If I disable this option, you can actually see that normally the range looks just kind of like squarish like this. But yeah, if you have this on, it will also pull this line backwards to where it came from, basically. Just a little quality of life thing, not too important. Right, so that's pretty much everything that has changed and or improved in the rangefinder. That's how you configure it. And yeah, if you want to know more, come to the Discord, and I'm happy to help you understand if something is not clear. But yeah, here you can see how it behaves basically as price moves, right? Depending on which side of the mid-range it is, the targets will either be on the lower side or on the higher side. Yeah, there it is. So that covers the tutorial series for the new OB.Quant version 3 of the previously known as overlay. And yeah, hope you guys like it. So I'm gonna sign off here and then see you in the next tutorial video. Bye guys.